Excel accounting practice problem. Adjust worksheet for adjusting entries. Get ready because we're about to excel. So we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. Practice tab starting out where we left off last time. Example tab in essence being an answer key. Let's stay here on the practice tab for now. Last time we were entering data for the second month of operations. We got a little bit fancy with the trial balance over here, where we had the beginning balance for the month of February, the year-to-date information for the 2 months of activity that we had put in place, the entries that were going to impact both the current month and the year-to-date information, and then the ending balance for February, ending balance for the year-to-date. We saw some differences down here where the differences would be applied out on the income statement accounts, the temporary accounts, as the income statement would be starting over from when we're looking at just the month of February versus the year-to-date information, having the year-to-date information. This kind of change would be something that software could often do if you're running a balance sheet and an income statement by simply changing the date ranges. So you want to get kind of accustomed to that component or that concept. We're now going to be converting this, however, to a worksheet for the adjusting entries. Now, adjusting entries are often something that you could think of as being done by like an outside CPA firm, or as at least a separate process in your mind. You want to be thinking of it as, in essence, a separate process. Oftentimes, you'll be exporting the information from like a software like QuickBooks in a trial balance format and setting up a worksheet similar to this in Excel, even if you're using accounting software, so that you can think about more clearly those couple entries, the few entries that you're going to be needing for the adjusting entry process. So basically, we're gonna adjust this worksheet to a worksheet typically seen in an adjusting entry process, which is similar to this. It's going to look something like this over on the example side, where we're just going to be looking at the year-to-date information for our practice purposes here. So we're going to get everything correct as of the cutoff date for the 2-month period ended on February 28th. And then we'll typically call the first column the column that we might be printing from, if it was in a QuickBooks software or some accounting software, the unadjusted trial balance for the year-to-date numbers here, always as of the cutoff, as of the end of the period. In this case, that cutoff being February. It might often be the end of the year, December 31st, oftentimes for a calendar year company, still just entering that information directly into, say, QuickBooks or some worksheet, so that you can then focus in on the adjustments that need to be made in the worksheet, possibly outside of the software, and then enter the information back into the software. Then we'll have our adjusting entries. So we're focusing in here just on those entries that are adjusting entries, period end entries. We want to keep a separation in our mind about those entries that are used for adjusting entries as compared to normal accounting process entries, so that we know what we're doing with regards to those things that are done at the end of the period to make our financial statements as correct as possible on whatever basis we are using, typically an accrual basis for reporting purposes. And then we'll have our adjusted trial balance at the end. So that's going to be the format of the worksheet. Let's go back on over to the practice tab here. So to do that, I'm not going to delete these cells, but I'm just going to hide the entire column. So I'm going to hide this column and select it and just right click on it and hide that column. Well, before I do that, let's undo that first. Let's take our ending balances and copy them over to the beginning balances, and then we'll clean out this middle section. So I'm going to take the ending balances where we left off last time, just going to copy those, Control C, and paste them right here in my beginning balances. And this will be our starting point worksheet for the adjusting entries process. And then I'll just basically delete this activity in the middle. We will remove the activity in the middle. And so there is our worksheet. Now I'm going to hide the February information and just look at the year-to-date information. So I'm going to hide the beginning trial balance for February, right click and hide it. And then I'm going to hide the ending balance for February, right click and hide it. These ending balances then are simply taking the beginning balance here and then adding the entries to it. Then I'm just going to adjust the names of this thing. I'm going to call the first item the unadjusted trial balance. And you could think about that, whatever accounting system you're using, you think about that That's the trial balance that has been done after the accounting department has done all the normal type of data input, and typically after the bank reconciliation has been completed, but we have not yet entered any of the adjusting entries to it. So there's no difference, in other words, from the trial balance to any other trial balance that would be created during the time frame, except for the timing of when it was created. It was created after the data input for the period and after generally the bank reconciliation. But the adjusting entries, the things that we have planned to do on a periodic basis at the end of the month or year, have not yet been done. Then I'm going to call these adjusting entries, and then this is going to be the adjusted trial balance. And that's going to be the typical terminology that you will see. Now note that some worksheets that you'll look at for this kind of adjusting process will have a very large, very intimidating worksheet, because they'll basically put 2 columns for the unadjusted, 2 columns for the adjusting entries, 2 columns for the adjusted trial balance. And that's because, of course, you traditionally have the debits and credits on the left and right hand side. But again, just if you're working in Excel, that is a very tedious worksheet to look at, and it really complicates the calculations of the formulas in that format. So if you're working in Excel, you greatly simplify the problem by basically saying, I'm going to put the credits, representing the credits as negative, in the same column, allowing you to do the data input a lot more easily and do your check figure more easily. So even if you have to manually create this, typing in the accounts from a database program or a piece of paper, then it's easy to check that you're in balance by getting to the bottom down here and saying, I'm just going to use a simple, what a mathematician would call more elegant type of formula, an easy formula, which is just the sum function to determine whether I'm in balance, rather than summing up one column, summing up the other column, and then subtracting the two, which is a lot more steps. We can also do things a lot more easily this way by simply selecting, say, the income statement and looking at net income down here, which has a credit balance, just double clicking on it, in other words, and you've got the net income calculation. I can add up the assets even with the contra asset there, and just select those items and have the most simple type of calculation, as opposed to taking the debits minus the credits. So it's really, in my opinion, and I think it's clearly, if you work with the 2 worksheets, you'll find this one's going to be a lot faster than working with a worksheet that has 6 columns that does the same type of thing, and then having to use formulas to double check things, which are using not just addition, right? You're using a lot more complex formulas in order to calculate it. So this is the worksheet that I would recommend. It'll also be a lot easier when we make the financial statements. If you've been working in the past, you've seen the financial statement creation, I think, in this format of a trial balance in Excel is far and away easier than making financial statements from another format of the trial balance, such as one breaking out the debits and credits and not using credits in a negative format. Okay, so we have that. Then we're going to do the adjusting entries. Now, remember, the adjusting entries are always done at the end of the period. So we're going to have our cutoff date here is going to be for the end of the month. They're planned entries. They are not something that basically we're fixing the accounting department's problem because they messed things up. No, we want the accounting department to do the things that they did typically for normal kind of adjusting entries, and we're planning then to do an adjusting entry at the end of the period in order to make the accounting data input as easy and efficient as possible, as well as to be able to report and show things as of the reporting dates, end of the month and end of the year, typically on the most accurate accrual basis as possible. So they're planned type of activities. They will typically have a balance sheet account and an income statement account related to them, and they will typically not be including cash. Remember, we've reconciled cash, so it's pretty good to go. These are going to be items that are not typically including cash. They're typically going to have a timing component to them. Therefore, they're going to usually have an income statement account related to it and a balance sheet account related to it. Those are the general rules you can kind of expect for the adjusting entries. So before we start as well, I'm going to adjust the columns on the left-hand side. I'd like to make a nice clean sheet that we're just going to be working adjusting entries on. So I'm going to be copying from Z to CH. I'm going to copy that and I'm going to paste that into the skinny right here. I'm going to right click and insert, not going to paste. I'm going to right click on the skinny and insert the copied cells. And then I'm going to copy the skinny over here, copy the skinny, and I'm going to put that right before the AD. So I'm going to add it right before the AD. I'm going to right click and insert the copied cells. So there we have the skinny, and then I'm going to hide everything to the left. So I'm going to put my cursor on column on the skinny, go to the Z, right click and hide all of that stuff. And then this stuff I don't need, it's not being posted anywhere. I'm going to select it, and I'm going to go up to the format painter, format paint it, because I don't want these indentations to mess us up. And then I'll just paintbrush this all the way down so we have a nice clean blue slate that we'll be working on. And then I'm just going to delete the activity so that now we have this clean blue slate. So we'll be entering these transactions into the adjusting entry worksheet. That's typically how you'll kind of see it if you're thinking about a traditional adjusting entry kind of system that might be done, you know, at the end of the year by a CPA firm or something like that, and then possibly entering it back into the accounting software. But we will also be posting them to the GL, because eventually you would then want them posted to the GL. So we had been posting to the GL on the right hand side. We'll continue with the posting process too. Now, one more thing that I want to point out here is that we will have some reversing entries as well. So we're going to have sometimes that we need to do a reversing entry, and this is going to be important to the adjusting process, because remember the goal here, we want to adjust things as of the cutoff date to make them correct on an accrual basis, but also not mess up the accounting department, which is doing things correctly as efficiently as they want to do them. We want the accounting department to not have to worry about these, you know, accrual adjustments when they're doing something like payroll, which is on whatever system the payroll is on. I don't want to make payroll more complicated. So that means that when we do our adjusting entries, there might be some of them which we should reverse to get back to the accounting department doing what the accounting department needs to do. We don't want to mess up the accounting department. So not all adjusting entries will need reversal, but some adjusting entries should and may need reversal in order to make that separation between the data input from the accounting department and the adjusting process clear. So what I'm going to do is I'm going to add a couple more cells to the left here, and then I'm going to make these reversing entries. So I'm going to select the skinny on over to AQ. I'm going to make 2 more columns. Right click and let's insert those items. I'm going to insert those. I'm going to remove the formatting, selecting this item and just remove the formatting. If you don't see that, that's okay. It's because we're just going to format just like these two. So I'm going to select AM to AO, format paint them, home tab, format paint. And then I'll just paintbrushy that format right there. There we have it. And I'm going to call these then the reversing entries. Reversing. And then I'll just say these are going to happen. I'm going to put the date here. I'm going to put a colon or a apostrophe, whatever that is, so that it will show up 3/01, the first day of the next period. These are going to be reversing entries. Let's do it this way, reversing entries. And then this is going to be as of that thing 3/01, the first day of the next period, because our cutoff date is February 28th in our practice problem. And this will be the trial balance. This will be the trial balance as of let's just say equals this thing, 3/01. So then all I'm going to do is say this is going to be equal to the adjusted trial balance, and then I'm going to basically add the blank cell to it. I want to copy that formula down, so I'm going to copy it down. I'm going to right click on it and copy it, but I don't want to paste it normal because that'll mess up my colors here. So I'm going to scroll down and I'm going to right click and paste it just the formulas, and enter. So there we have it. So that'll be our reversing column. So we'll do our adjusting entries to get to our adjusted trial balance, and then some of those we will reverse. Now I'm not going to post the reversing entries. I'm just going to post the adjusting entries. So hopefully that'll make a little sense. When I say post, I mean post them to the GL on the right hand side. Hopefully that'll make more sense once we get going. And we'll do this one step at a time once we get on a roll here. And then I want to add another skinny. I need another skinny to give me some space. So I'm going to put my cursor on this skinny. Let's put it on this skinny right here, this one. Copy that. And I'm going to insert that skinny before here. We're going to right click and insert the copied cells. So there we have a skinny between the trial balance and our general ledger. So that looks good. And then lastly, down here on the income statement, I'm going to imagine then that this happens on 3/1. All the income statement accounts should basically roll out into equity because now it's after the cutoff date. I'm running the trial balance for just 1 day. So I'd like to basically close out everything on the income statement. So in other words, I'm going to zero out everything on this side. So nothing on the income statement because it's going to close out. And if I copy my balances over, these ending balances, I'm going to copy these over. I'm going to just copy them over. So now I'm out of balance by the 4770 because that stuff should roll into equity. And I'm going to roll it into equity this way so that it will change as we change our data over here. So what I'm going to do is I'm going to take this 77895, go to the end of it, and I'm just going to say plus the sum of all of the activity on the income statement on the adjusted trial balance, which I'm just going to lump together in one lump sum number in equity, like it's closing out because we're closing it out to equity. So now we've got the 82,665 on the trial balance after the cutoff, basically running it for 1 day on 3/1, having closed all of the income statement accounts into it. And we'll see the reversing entries will have an impact over here, and that'll cause us some kind of problems, but we'll explain why exactly we will do the reversing entries the way we will do them. So there's going to be our worksheet. Now, when we first start out, when we're just doing the adjusting entries, we will hide columns A to R. We'll hide them and just work over here. And then when we then go to the reversing entries, we'll unhide the reversing entries and then focus in on them as well. So I think that's it. I think we got a nice clean worksheet. We're ready to go next time.